Wish you a happy new year. So today we have to discuss the depreciation. So today I will take only 1 hour. So next class I will put tomorrow morning 6 a.m. Before that we have to complete that bank reconciliation manufacturing accounting partnership. Most probably within 2 hours or 3 hours, we will complete the depreciation. Then we have to start the company accounts. So today we have to discuss about the depreciation. So depreciation already you know about in the advanced level. How to calculate the depreciation? What are the method you have to use? Which type of depreciation should be used for the property, plant, and equipment? So the depreciation is derived from the Latin word. So it is for your just for your information. So the depreciation is a gradual and permanent decrease in the value of the asset from any cause. So for example, when you are purchasing an asset, so you have to identify the useful life. How to calculate the useful life? How to identify the useful life? So the useful life in how many years it can be used. For example, manufacturing the machinery purchased. So that machinery purchased for the production purpose. Then that machinery used for 10 years. So each and every year the value will be decreased. How the value will be decreased? There are some parts are sometimes you have to change the parts. So for example, if you use the motor vehicle, so you have to change the tire particular kilometer. So it is called as a depreciation. Tire also depreciated particular period. Then you have to change the total value of the machinery, total value of the motor vehicle, total value of the computer, total value of the other property plant. So the gradually or permanently decreasing the amount, value decreasing for the asset. So the bearer plant is living a plant that. So for example, uh, is used for the production or supply of agricultural produce. Is expected to bear produce for more than one period. Has a remote likelihood of being sold as agriculture produce. Expect uh, incidental scrap value. So then you have to identify some terminology. Some when you are studying the depreciation, you know some terminology, so you can understand some terminology. One is the carrying amount. So if any question is given, you will do 100%. You will do 100%. The correct answer you will find out. But sometimes you have to understand. You cannot be understand the terminology. So carrying amount is the amount at which an asset is recognized after deducting any accumulated depreciation and accumulated impairment loss. So the carrying amount means the cost minus accumulated depreciation. The depreciation differ from the accumulated depreciation. The depreciation calculated annually. The accumulated annual depreciation continuously you have to add annual depreciation called as a accumulated depreciation. For example, you have some machinery before 5 years. After 5 years, you have to find out the accumulated depreciation. How to calculate the accumulated depreciation? So each and every year depreciation added at the end of the year, past year depreciation should be added. So that is the carrying amount. Carrying amount means cost. How much you have to purchase. For example, you have to purchase 1 million amount of one. You have to purchase 1 million amount of machinery. The accumulated depreciation 550,000. So the carrying amount 450,000. So this is the calculation of the carrying amount. The cost minus accumulated depreciation. What do you mean by cost? So the cost is the amount of cash or cash equivalent paid or fair value of other consideration given the acquired asset at the time of its acquisition or construction or where applicable. The amount attributed that assets were initially recognized in accordance with the specific requirement of the SLFRS. So when you are purchasing the asset, when you are purchasing a machinery, so the amount, the value, so for example, if you want to purchase a machinery, 1.5 million. So the cost is 1.5 million. You have to pay 1.5 million. Sometimes you have to pay cash 1 million, 500,000, any cash equivalent. Sometimes you have to pay by check. Sometimes you have to pay through the leasing. So the cost means the amount of cash or cash equivalent paid or fair value of other consideration given to acquire assets. When you are purchasing an asset, when you are acquiring an asset, you have to pay the value that is called as cost. Depreciable amount. Depreciable amount means depreciable amount is the cost of an asset or other amount substituted for cost less residual value. So for example, already you know the carrying amount. Carrying amount means cost minus accumulated depreciation, carrying amount. So the accumulated depreciation deducted from the cost. The depreciable amount means, so when you, how to calculate the depreciation for an assets. Okay, how to calculate depreciation for an asset. For example, here you can see this is the cost. This is the cost 1 million. This is the scrap value or residual value. This is the residual value. Residual value 250,000. Residual value. Okay. So the 750,000 called as a depreciable amount. Depreciable amount. Depreciable amount means next month. So this year, so in 2023, the cost 1 million, the residual value 250 you have to purchase. So the depreciable amount means 750,000. What do you mean by residual value? So after useful life, you can sell this amount, residual value. The value after 5 years, the value of the machinery is 250,000. Okay. So then depreciation. Depreciation is a systematic allocation of the depreciable amount of an asset over its useful life. So this is a systematic distribution. What do you mean by systematic distribution? Systematic distribution means you have to allocate the amount for each year. For example, this is the cost of the machinery 1 million. Useful life 20 years. This is the scrap value, residual value 250,000. So you have to calculate the depreciation. So here the residual value is given. If the residual value is given, you have to deduct the residual value from the cost. Otherwise, if residual value is not given, you can divide the cost by useful life. Here you can see the depreciation calculated 750,000. Why 750,000? The cost 1 million minus 250,000, 750. This is the depreciable amount. So this depreciable amount divided by useful life, therefore the depreciation 37,500. 37,500. So this is the calculation of the depreciation. Entity specific value. The entity specific value is the present value of cash flow an entity expected to arise from the continuing use of an asset and from its disposal at the end of its useful life, or expect to incur when settling a liability. The specific value is the present value of the cash flow of the entity. Okay, so you will study in this how to calculate the specific value, net present value, fair value. I think already you have to study corporate finance, no? This the first year you have the corporate finance subject. First year or second year? Corporate finance. Did you study the corporate finance? Students?
Yes, sir.
Can you hear me?
Yes, sir. Yes, sir.
Did you study the corporate finance? Do you have the corporate finance subject in this semester or previous semester?
First year, sir.
First year. So in that time you just know about the present value like that. The fair value means fair value is the price that we receive to sell an assets or pay transfer liability in order to in orderly transaction between market participant at the measurement date. So the thing is, for example, if you want to sell the machinery, if you want to sell an asset, so you calculate the fair value. Okay. So fair value. So after selling getting the fair value, you have to settle the liability. Sometimes when you are purchasing a machinery for cash and other cash equivalent, so the fair value you have to calculate the fair value and selling the asset and get the amount and you have to settle the liability. Okay. So at the measurement date, the impairment loss. The impairment loss is an amount by which the carrying amount of an asset exceeds the recoverable amount. So carrying amount greater than the recoverable amount, that is the impairment loss. So you will detailedly discuss this fair value and impairment loss in third year. Okay, so just for your information, you can read it. So what do you mean by property, plant and equipment are tangible? Tangible means you can touch and identify. You can easily it is visible for your eye. Okay, so tangible. So the in accounting standard called as a property, plant and equipment. The property, plant and equipment are held for use in production or supply of goods or services, for rental to others, or for administrative purpose. Okay, so the thing is, the property, plant and equipment, the how to say the definition. So it is used for the production. It is commonly called as under the property, plant and equipment. Okay. At the same time, are expected to use during more than one period. Sometimes some property, plant and equipment used for service providing service for rental to others. So that is called as a property, plant and equipment. Are expected to be used during more than one period. So you have to use the machinery several times per day. It will be used for the batch of production. Sometimes there are 2 or 3 batches of production done by the particular machinery. So that is used for more than one period. Sometimes it may be used 5 years or 10 years, like that. Okay. So then recoverable amount. Recoverable amount means is the higher of the asset's fair value less cost of disposal of a recoverable amount is the higher of an asset's fair value less cost of disposal and value in use. Okay, so this is not a calculation here. So we have to consider only the depreciation calculation in different way. So it is a so in depreciation, you will I think more than 10 marks or 12 marks in your final examination. So you can identify, you can understand easily these things, and also you have to consider for your examination. The residual value. What do you mean by residual value? Already we know about the residual value in the depreciable amount. When you are calculating the depreciation, you know the residual value. So the cost minus residual value. So now you can understand what is residual value. Residual value of an asset is an estimated amount that an entity would currently obtain from disposal of this asset. For example, the useful life of an asset 5 years. So after 5 years, the residual value 125,000. So that 120,000, when you are selling this asset after 5 years, you can receive 125,000. That 125,000 called as residual value. After deducting the estimated cost of disposal, sometimes there are some costs incurred for the disposal. So that cost also deducted from that residual value. Okay. So if the assets were already in the age and in the condition expected at the end of the useful life. So when the useful life ended, for example, particular machinery useful life is 10 years. At the end of the 10 years, the useful life is over. So at the end of the 10 years, that amount should be calculated. When you are disposing that particular asset in the market, you have some expenses. So how much you have to receive from that disposal, you have deduct that expenses. So the net amount called as a residual value. Okay. So the useful life. Useful life, the period over which an asset is expected to be available for use by an entity. So, for example, the machinery useful for 10 years. So, after 10 years, there are some interruption in the production in the machinery. So, that is over. So, most probably the machinery used for 10 years. That is the useful life. Sometimes some electronic equipments are used for a particular period. That is called as a useful life. The number of production or similar unit expected to be obtained from the assets by an entity. Sometimes for some machinery used for the particular production period. For example, a particular photocopier, the output, number of copies, photocopies you have to take. So every service, we can identify number of copies done by this photocopy machine. For example, 500,000 copies done by that photocopy machines. So after that, the useful life is over. So that is called as a useful life. The number of production. Sometimes some machinery producing the product. Sometimes, for example, 1 million output. 1 million output done by that particular machinery without any interruption. So that is the useful life of 1 million production. So that is the useful life. The characteristic of depreciation. So depreciation is charged against the profit. Okay, charge against the profit. I think already you study in the corporate finance, the net present value. You have to consider the depreciation. Already the profit calculated against the depreciation. Against the depreciation means depreciation deducted. So when you are calculating the profit, the depreciation considered. It is indicate the diminution in service potential. It is an estimated loss of an value of an asset, not an actual loss. So it is estimated loss. It's depend upon a different assumption. Okay, so it is depend upon the different assumption. Sorry, it is depend upon different assumption. It is depend upon the different assumptions. So sometimes some assumptions are taken, useful life, residual. It is a process of allocation, not the valuation. So the valuation is different meaning. So valuation is a different meaning. It is a depreciation, there is an allocation. Every year you have to allocate for the depreciation. Valuation is different concept. You have to value the machinery. Sometimes market value will be increased. Nowadays, the market value of the motor vehicle increased due to the economic collapse. So it is arise mainly from the internal cost like wear and tear or depletion of assets. But it treated as any expenses charged against the profit like rent, salary, which are erased due to external transaction. Depreciation of any particular asset is restricted to working life of the assets. So the useful life, the depreciation depend on the useful life. So after the useful life, you cannot be deduct the depreciation. Okay, it's charge of a tangible fixed asset. Tangible means visibly you can visible for your eye. You can touch and understand. Touch and identify. It is not charged for any other current assets. Current assets mean less than useful for 1 year. For allocating the cost of intangible assets mean goodwill. The certain amount of their total cost may be charged against the periodic revenue. This is known as amortization. So it is advanced amortization. So we can understand this thing. The objective and of necessity for providing depreciation, you can read and understand. So easily, objective of the necessity for providing depreciation, correct calculation of the production, cost of the production. For example, you have to use the particular machinery for the production, the machinery used. So there are some costs incurred. You can use for the petrol for that machinery. Sometimes some parts are depreciating. So you have to calculate that cost outs. Correct calculation of profit, correct disclosure of the fixed asset for the reasonable value, provision for replacement cost. So this is a provision. So the depreciation calculated at the end of the 10th year, the useful life is over. So you can replace another machinery. You can purchase another machinery. Maintenance of capital, compliance with the technical and legal requirements. So these are the things you can consider. Other thing is factors considered for the calculation of the actual depreciation. So easily you can understand. So if any question is given, you will be done correctly, 100%. Okay, so that's the thing you need to understand. So what are the things? What are the factors to be considered for the calculating the actual depreciation? The actual cost of the assets. You know what about the cost? Cost means when you are acquiring the asset, how much of cash or cash equivalent you have to pay. You paid it. So that is the actual cost of the asset. In addition, if any made of asset during the year taking in consideration of the date of purchase. Sometimes particular machinery purchase in 2020. In 2022, you have to additionally add some parts, the particular separate some of the machine, some of the parts fixed with the particular machinery. That machinery it used for the production. Without the additional parts, you cannot be produced. So the particular additional part is added with your machinery. So the total calculation is considered with both machinery and the parts. The expected amount of interest of opportunity loss. Estimated life. Other thing is the scrap. breakup or residual value, if you know about that. Obsolescence. Huh? Sometimes some change of assets going out of fashion. The renewal or repair of the assets. Legal provision. So the Companies Act, Income Tax Act, Inland Revenue Act. So when you the financial accounting purpose, you know the financial accounting purpose, you know the calculation of the depreciation. But in the tax purpose, when you are preparing the statement according to the for the tax purpose, that is calculation is different. You can allowable amount. The amount should be deducted. How much the amount of should be deducted, that should be defined by the Inland Revenue Department Act. Okay, so the legal provision. Okay, that's all the introduction part. Now we have to move the accounting standard. Okay, so from so, uh, from we can continue the session. The accounting standard. Already you know about when you are preparing the financial statement, you are following some guidelines, you are following some rules. So accounting concept, generally accepted accounting principle. So like that, the Lankan accounting standard. Each and every standard talking about each and every matters. For example, LKS 1 said about presentation of the financial statement. How you can present the financial statement. Some accounting standards say recognition of revenue. So each and everything explained by the standard. So like that, the LKS 60 talking about the property plant and equipment. So each part of an item of property plant and equipment with a cost that is significant in relation to the total cost of the item shall be depreciated separately. So the property plant and equipment is the common name. Under the property plant and equipment, there are several different types of assets are included. Machinery, computer, land, building. So each and everything should be categorized under the property plant and equipment. So that each and every categories should be separately depreciated. Okay. Sorry, it is official part. So the entity allocate the amount initially recognized in respect of the item of the property, plant, and equipment to its significant parts and depreciate separately each such parts. For example, appropriate to the depreciate separately the airframe and engine of the aircraft. So here, this is one of the example. So the aircraft means flight, aeroplane. So here they said the depreciation calculated separately for the engine of the aircraft and airframe. So that is the thing, the separation. Some equipments are, some property, plant, and equipments are depreciated separately, such part. Okay, so that is said about the property, plant, and equipment. A significant part of an item of the property, plant, and equipment may have useful life. Depreciation methods are same for the useful life and depreciation method for another significant part of the same item. Such part may be grouped and determine the depreciation charge. So the useful life as a depreciation method. The same for the useful life. Okay. The extent that an entity depreciates separately some part of item of the property, plant, and equipment, it also depreciates separately the remainder of the item. The same. The depreciation charge for each period shall be recognized in the profit or loss unless it is included in the carrying amount of the another asset. So the depreciation charge for the each item recognized in the profit or loss. So you have to calculate the depreciation according to the accounting standard, and it should be transferred to the income statement under the depreciation against the profit. The depreciation charge for a period used to recognize as a profit or loss. However, sometimes the future economic benefit embodied is an assets are absorbed in producing other assets. In this case, the depreciation charge constitute part of the first of the other assets and it's included in carrying out. So different LKS are there. So the LKS 2 talking about the inventories. Okay, so that is you can read and understand. Depreciation amount and depreciation period. So here you can read and understand these things. Okay, so just for your knowledge, so easily you can understand, read and understand these things. And also depreciation method. The depreciation method used shall reflect the pattern in which the asset future economic benefit are expected to be consumed entity. Okay, so here you can see the depreciation method applied to all assets shall be reviewed at least each financial year end, and if there have been significant change in the expected pattern of consumption of the future economic benefit embodied of the assets. Uh, the method shall be charged to reflect the change pattern. Such as change shall be accounted for the change of the accounting estimate according to the LKSA. So this is talking about when you are calculating the depreciation for the particular property, plant and equipment, you have to follow the particular type of depreciation. So can be changed in between. Okay. In some circumstance, you have to change. For example, you have to use in the straight line depreciation for the particular machinery. So suddenly you cannot be changed straight line to declining method. So that is the thing. So the LKS 8 talking about that accounting estimates. Okay. So here the example 1. First you can understand the following information about the machine was extracted from the books. There are 4 machinery, cost of machine, expenses incurred in the time of purchase to be capitalized, estimated residual value, expected useful life in years. Calculate the rate of depreciation under the straight line. It's a simple one. Okay. So I will give 5 minutes. You can calculate the depreciation now. So easily you can understand this question. And first you have to calculate the depreciation. So I will call one by randomly any person. You can show your answers or you can text your answers. Before that you can't text. Huh? So first you have to uh, you can understand these questions and do it. I will give 5 minutes. Okay. I will give 5 minutes. Okay, what about the answers? So I call MS55. I is in online. MS55. MS55. I is in online. No.
Yes, sir.
Yes, what about the answer? Did you find 55? So please check, send your answer so you can on your video. What about the answer? MS55. The first answer for the machinery one depreciation. So, MS55. Come to I is in online. Come to come to.
Yes. Yes, sir.
So what is the answer? The first machinery. So otherwise you can put in the chat box your answer. Come to. You can send the answer or in the chat box. Machinery one depreciation come to. Okay. So the some people send the answer. Come to and come 55. No answer. Okay. So the calculation of the depreciation is easily you can understand the cost minus scrap value. I expect into the purchase to be capitalized. The second column, third column is the expenses. So when the machinery purchase, the amount should be capitalized, this amount. Therefore, you can add both amount, cost of machinery plus expenses. So these expenses are capitalized because the machinery value is increased. So the total amount, cost plus expenses incurred minus residual value. Residual value means at the end of the life, end of the time, you have to find out the residual value. So you can deduct the residual value and divide it by useful life. Okay. So this is the answer. So the total cost of the assets 100,000, 31,000, 128,000, 208,000 because the cost plus expenses. Okay. The estimated residual value means the residual value, scrap value. So the total cost minus estimated residual value. Here you can find here 100,000 minus 20,000 divided by 8. Divided by 8. 100,000 minus 20,000 divided by 8, because the total cost 100,000, residual area 20,000. Therefore, net amount 80,000 divided by 8. Okay, so the total depreciation 10,000. Okay, 10,000. So how to calculate the rate of depreciation? Rate of depreciation means the 100 the depreciation 10,000 divided by 100,000 multiplied by 100, because the depreciation for the machinery for the particular year 10,000 and the total cost is 100,000. So what is the percentage of the depreciation and in the total cost? So the 10,000 divided by 100,000 multiplied by, so that is 10%. So like that you have to calculate the depreciation. Okay, so I think it is okay. So just I have to explain the basic idea of the depreciation. Some other types of depreciations are there. We will discuss and complete in the next class. So what about the next class? So I think tomorrow morning is okay. 6 to 8. Tomorrow we will complete the depreciation. So tomorrow morning 6 to 8, the advanced accounting. So we will meet on tomorrow morning 6 to 8. Other things, I want to talk something regarding the examination and other time. So tomorrow we will discuss that things. So tomorrow 6 to 8, morning 6 to 8, the online lectures will be held. Okay. So if you have any doubt, you can ask. So otherwise, we have to wind up the session. Tomorrow morning, 6 to 8, we will meet. Okay. Okay. Thank you very much. Okay. Good night.
Thank you, sir. Thank you, sir. Thank you, sir. Thank you, sir. Thank you, sir.